China has developed into an economic engine for the past 20 years. It has grown at a faster rate than any other nation in the world. But what if I told you that China's entire growth was a bubble? Cathie Wood, CEO of ARK Invest, compares China's growth to Japan's 1990s financial crisis. Similar to the GDP that Japan drove by a housing bubble, China is currently going through the biggest real estate bubble ever. In today's video, we'll talk about how China's economy is crumbling, and it's far worse than you think. So stick around till the end and subscribe to our channel if you haven't already. In the previous 20 years, the Chinese economy has expanded significantly, and real estate has contributed a sizable portion of that. Developers of real estate have taken out loans to increase the number of cities in which they hold real estate. Cities in China are filled with homes and office buildings. Speculators started buying homes exclusively for price growth, which led to a growth in the cost of housing. This was caused in part by the rapid increase in population. Because the cost of housing just kept rising every year, most Chinese citizens were no longer able to afford the typical home or apartment in urban areas like Shanghai or Beijing. Due to the rising demand for homes close to cities, prices started to rise, causing the population to grow even further from urban areas. The sensible course of action would be to buy property away from the city. Many people did just that. People started swarming into homes and apartments, not in the cities of China, but 10 or 15 miles away. Real estate developers thought this growth would persist, so they built homes in advance farther and farther away. These days, if you drive for 1 or 2 hours outside of Shanghai or Beijing, you'll observe something incredibly odd. There are many contemporary structures in excellent condition. However, nobody lives there anymore. They're known as ghost cities. The only reason they're still present is that investors believe that the prices will rise in the upcoming future. This demonstrates the expanding real estate bubble, an essential engine for the national economy. These vacant apartments are so prevalent that the overall volume of space contains the entire nation of Italy. Crazy, isn't it? 20 years of appreciation, and now China's real estate market has a current value of $50 trillion, 2 times as much as the US and nearly 4 times as much as the entire GDP of China. Investment management firm Loomis Sayles estimated that approximately 70% of China's total wealth is real estate. It is common to see citizens in China put money aside for years just to buy one property. The cost of housing is so high that even after years of saving, the citizens of China don't have a choice but to need a mortgage to pay for housing. These rising real estate costs affect citizens and inculcate a sense of missing out, eventually compelling citizens to take out loans at risky amounts. This type of appreciation is very concerning for China's economy. This was seen during the American recession of 2008, and similar indications are seen in China today. There are already indications of China's significant slowdown of real estate boom. As the housing market in China simply keeps rising in price, property developers have taken various actions to swiftly increase the size of their real estate holdings. Similar to before any financial crisis, greed took the spotlight, and soon developers were unable to manage their debt. One of these designers was the pinnacle of Chinese real estate development, Evergrande, one of the largest real estate developers in the world. With the aid of corporate bonds released to foreign investors growing its real estate holdings, Evergrande grew its real estate portfolio to over 565 million square meters of development land. It was only made possible by Evergrande's removal debt of more than $300 billion. Evergrande's success was attributed to its enormous access to capital. It became the most valuable company in 2018, the world's largest real estate firm. This optimistic attitude started to change drastically. Investors became aware of Evergrande's serious problems, and an interest payment of $260 million was not paid back by Evergrande. In response to this, there's been a tremendous credit outcry. Evergrande's bond prices have sharply decreased during the previous few months. International bondholders are currently posing threats to file a lawsuit against Evergrande in response to its debt woes. China's President Xi is attempting to lessen its reliance on the real estate industry by decreasing the degree of real estate speculation. Xi is trying to explain to people that houses are for habitation only, not for speculation. Chinese developers of real estate are currently disappearing like flies, and the catastrophe is only getting worse. It is now abundantly clear that Chinese real estate is possibly not the best location at this time, and real estate developers are all too aware of this. The Federal Reserve anticipates a slowdown in China's real estate market may eventually harm the U.S. economy. The Fed stated that stresses in China's real estate sector could strain the financial system with possible spillovers to the United States. The debt crisis is getting so bad that the ratio of China's total debt to GDP is nearly comparable to that of developed nations. Imagine a country with a strong economy like China having almost as much debt as GDP relative to industrialized nations. Such a lengthening is sure to have unfavorable effects. Kaisa Group Holdings and Evergrande are attempting to sell their homes as soon as possible, and simply put, Evergrande's properties aren't selling quickly enough for the business to settle the loan's interest. It will slow China's previously rapid GDP growth that economists have long been in awe of for decades. Cathie said, if we're correct, during the next 3 to 6 months, the market is likely to focus more on the risk of recession in the U.S., the serious slowdown in the Chinese and emerging market economies, and potentially a surprising drop in inflation. That being said, let us know your thoughts in the comments below. If you enjoyed this video, please hit the like button and subscribe to our channel for more content. We'll see you in the next video. Till then, take care.